Hello and welcome to another update video about HBAR. Here on the HBAR chart we can see that the price has actually reached the lower boundary of the micro support area for this wave 2 correction. So it would be ideal if the price could now turn around. It's a bit early to say that because we haven't even broken above any swing high. So there is no higher high or higher low that we could refer to. Now, okay, it rallied and then formed a higher low. If that is actually a higher low, because it's unclear if it's bottomed at this stage, but that's about it. We need for further confirmation that we're now in an upside trend reversal, a little bit more upside momentum, and we need to break above certain levels. So let's talk about that. So in previous videos we talked about the potential that a fourth wave bottomed here on the 3rd of February. We rallied in a wave 1, formed a pullback actually in this wave 2, and we could now be in a third wave, but there is much more evidence needed. Now, if this indeed is a third wave, it would have to be an A, B, C structure, because the entire move up would likely be a diagonal. Now, I will take it off the chart again, because labeling it like that is, well, okay, I can leave it on there, but it's not that it's predictive, because we haven't got enough upside momentum. We don't have any significant price action from the low. Okay, there is kind of a sharp reaction, but it's size-wise, yeah, it's not enough distance traveled to make it significant. What I mentioned to you in the last update is that, look, if we have a correction here, then first of all, the 78.6 retracement must hold. That is the 19.5 cent level. And any break below that level would increase the risk. It will not be a guarantee, but will increase significantly the risk that this so-called 1-2 setup, which is a bullish upside reversal pattern based on Elliott wave, well, the idea would be that it could then be invalidated. Yeah, it could be invalidated. The break below 78.6 fib level is a warning. It's not a confirmation, but it is a strong warning. And what we need to see is a break above a few levels. First of all, the B wave high. That is the end of this Elliott wave triangle that we saw. I assume it's a triangle. The idea is that in this correction, we had an A wave down, a B wave triangle, a bit of a weird one, but possible. In a triangle, it's important to get this series of higher highs and higher lows. Now, a B wave is allowed to overshoot, even in a triangle, which it did. That was a bearish signal here. And then, yeah, we want to get a break above the end of that triangle. So we want to get a break above that 23.99 level, 24 cents rather. And then also a break above the swing high above at 24.8 cents. Now, those are only really, yeah, small signals. Let's call them small or minor signals because it's just not so substantial. It's just not so it's not so significant because this is all happening within the larger range. What is more important is that we get a break above this 28.3 cent level, which is the swing high from the 4th of February. A lot of coins are still holding below that level. Yeah, and obviously every chart has their own level, but most charts are still hovering just below the 3rd or 4th of February high. And as long as we're doing that, we are in a range. So this has really been now our situation here, our dilemma for the last couple of weeks. And we are watching for signals that, first of all, in the range, we're trying small breakouts. But what is more relevant, what is more relevant is a substantial breakout to the upside above the swing high of Circle Wave 1. Where should Circle Wave 3 go to if the wave 2 bottomed where it potentially did yesterday? Then what we can do, we take the length of wave 1, okay, and we go to the low of the wave 2. Sometimes people ask me, how do you measure that? How do you measure that? Well, I try to always explain it. Top of the wave 1, and then you measure from the low of the wave 2. And we know that for a third wave, the 138% extension is relevant. That's normally the first ideal target. And yeah, we haven't yet reached that, obviously, but let's say as long as yesterday's swing low is holding there, the 78.6 retracement, as long as that's the case, we should see the market move higher towards that 138% extension, or even a little higher. Right? This is the first ideal target, not a maximum. So these are all the parameters we're watching now. Definitely interesting. We see a little bit of green across the sector, but it's too early to say if we've got significant lows in place. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.